Hey guys, welcome back to another video by Fully Informed Trade, or 5Trade for short, knowledge for everyone. My name is Alex Cho, and right now I am talking about the UUP Dollar Index DB US Dollar Index Fund, whatever. But basically, the PowerShare Dollar Index Fund is heading higher, and because it is, it's a very good idea to anticipate stocks to remain volatile, to anticipate commodities to remain volatile. All assets aside from bonds will benefit from the stronger dollar trade, and this is mainly because the Euro-US dollar continues to fall in valuation. Because the Euro-US dollar continues to fall, it is inflating the value of the dollar against a basket of currency pairs, and because that's what's going on, dollar is trending higher, stocks are falling. Generally bad news for stocks, and I anticipate the dollar index to continue to head higher. I think this area right here could be seen as a double topping formation, but I don't necessarily think it will stop right there necessarily. I think the dollar index is in for a multi-year uptrend because again, Europe is experiencing two risks: political risk and inflationary risk. Right now we're in a deflationary spiral, of course, and that deflationary spiral is what's leading to this political risk, and this political risk is what's making us very unconfident, is making us unconfident in the euro and how stable the euro actually is. But because we're dealing with political risk, I'm going to give them the benefit of the doubt, and I'm going to assume that they're going to save their own butts. They're going to inflate the economy. Maybe they'll throw out a $5 trillion European Stability Fund, and the European Central Bank will go ahead and enable that. Once they enable 3 to 5 trillion euros worth in inflation, maybe even up to 8 trillion euros in inflation, whatever it takes to reduce the government deficit, to get money circulating. They can get that money circulating. That's going to be inflationary by nature. And I also anticipate the European Central Bank to continue to lower their prime rate. And if they lower their prime rate and they, push 3 to 5 trillion dollars worth of, or 3 to 5 trillion euros worth of currency into the economy to refresh it a bit, that will make people more confident in the European economic zone, but it will also imply inflation. And since Europe is going to enact inflationary monetary policy that's more inflationary than what's going on in the United States, that's going to cause the value of the dollar to rapidly appreciate against the euro. So, so the course of events will only lead to a weaker euro against the US dollar. And since the US dollar index is based on, is weighted 50% the euro, if the euro continues to fall, based on the macroeconomic, based on the political realities that we're dealing with, chances are the US dollar index will continue this upwards trend. And I'm just going to sit back, put my hands behind my head, and just ride the dollar higher. So that does it for me for today. I think we all should. I think. Well, I hope you guys all have a wonderful trading session, a wonderful trading week, and I hope you guys make a profit every single day of the year. Take care, folks.